Welcome to the 12th webinar, our journey through contemporary India, dialogue with experts. I'm Sergio Lugaresi, the coordinator of the CeSPI Observatory on India. And today we are going to talk about building a modern financial infrastructure. And the speaker will be Venkatesh Ariyaran, who is India representative of the Open Invention Network and expert in digital public infrastructure. Magda Bianco, Director General for Customer Protection and Financial Education at the Bank of Italy, will be the discussant. So in this webinar, we have the convergence of two fields of interest of CeSPI. One is India, of course, and the other one is also financial inclusion, on which CeSPI has an observatory focused on financial inclusion of migrants. And also we will talk about the digital identity, unified payment interface, the impact that has had on India, very successful story apparently. And but also there is a third argument that is there and maybe picked up in the discussion, and this is digital sovereignty, something that maybe is also of some interest in the European Union. As usually, the main speaker will have 20 minutes, and then the discussor 10 minutes. Then we'll have a session of questions and answer. And for this reason, I encourage you to post your question in the chat box of Zoom. So Venkatesh Ariyaran is, as I said, the representative of the Open Invention Network. That is an organization that protects the open source community from patent litigation. He's also an independent researcher in digital public infrastructure, artificial intelligence, and open source software. Venkat has set up the Data Governance Network, a network of think tanks. Prior has been director fintech in the Indian software product industry roundtable that built public digital infrastructure such as India Stack. And in this role, he helped some of India's largest banks in adopting India Stack and in its components, including the unified payment interface. He is also a member of the governing board of the Software Freedom Law Center, a law firm that represents the free and open source software communities. He has served in several positions, worked on regulation, and has been former executive editor of Expert Computer, and has been the first Indian to be selected for the prestigious Knight Science Journalist Fellowship. Venkatesh, the floor is yours.
Thank you. I'll quickly start by saying that, I spent about 15 years in technology journalism in India from 1993 onwards. And then I spent about another 15 years in public policy with companies like Red Hat and Google. And since 2012, I've been working mostly with nonprofits. And and there is one organization called the Indian Software Product Industry Roundtable. And the goal was to kind of create public goods which can be leveraged by the Indian software product industry. And one thing led to another, and there is a collaboration between iSpirit and Nandan Nilekani, who was the chairman of the Unique Identity Authority of India. And this kind of really became a big thing. And in the last several years, basically we have built out a digital architecture for identity, payments, and data exchange. And in this 20 minutes, I'll try to explain why this makes India one of the most modern financial infrastructure anywhere in the world, and why this is also extremely powerful in terms of helping India preserve its digital sovereignty. So can we go to the first slide? So at a very high level, Raul Paul is somebody who writes a newsletter called the Global Macro Investor. And he said that I've not seen a more transformational technology than India Stack. And there are many others who have said that what we have built out in India with India Stack, which is basically identity, payments, and data exchange, is something that is as important to the Indian economy as the railroad was to the UK or the interstate highways were to the US. Next slide, please. So I'm now, quickly jumping into how we built out this particular infrastructure and what was the logic and the thought process behind it. So we said, we looked at people who are not in the mainstream of the modern financial ecosystem. And we started thinking about how do we kind of get them to access a loan. So that was the problem statement. And we personified that in the picture of this lady and we called her Rajni. So if Rajni needs a loan, how can she share her data? How can she look at what are the kind of loan offers that are there? How can she select the best offer? Then, how can she get the loan in her bank account? And then, how can she repay that loan? So it's the entire value chain that you have to design for. Uh, and therefore, we started this journey. It has taken us about 25 years to kind of get to this point. But, after 25 years, we have built out each and every component of this cycle of financial inclusion and all the digital building blocks for this financial inclusion. Next slide, please. So in this circle, you see what are the building blocks that are required. So if she needs a loan, she needs to broadcast that to a credit marketplace app. And then because we have privacy laws like GDPR and the data protection bill in India, she has to consent to share her data. Then there has to be a credit marketplace where she can, where loan generating institutions like banks and non-bank financial companies, etc., can make offers to her. There has to be a mechanism for paperless contracts. There has to be a method for digital signatures. There has to be a payment app. There has to be a collections app. So these are the digital building blocks that need to be there in place to give her that loan. Let's go to the next slide. So this is what, the outer circle is what we have built out over the last 25 years. The Aadhaar digital identity system was built in 2010, and today it has got about 1.4 billion users. I'll speak a little bit more about that. Then you have the account aggregator ecosystem, which is a mechanism for collecting consent in a digital fashion. We are building out the public credit registry, which is basically to ensure that, if somebody has taken a loan, there is a visibility of that loan to other lending institutions in the ecosystem with consent, so that a person is not borrowing money again and again and again beyond their capability. Then you need to build APIs for loan offers. You need mechanisms for signing the loan document contract digitally without any paperwork, without any printed paper. That we have enabled through Aadhaar. I'll explain that a little bit. The unified payment interface that we have built out, that enables Rajni to, accept the money into her bank account and also make the repayments back to the lending institution. And then there are, mechanisms like the Bharat bill payment system, which we have created to ensure that people, like, let's say a power utility, etc., can seamlessly send their bills across to Rajni and then collect the money for those bills. And as they pay the bills on time, that also goes to the credit record that they build up over a period of time. Next slide, please. So, rolling out something like this at a population scale is not a very easy thing. And especially because, we are a democratic country with, a lot of pulls and pressures. So you needed to have clear policy arguments for, different financial layers in the ecosystem. So the the main argument, main three arguments for three different financial sectors of the economy were, for the reasonably well-off part of the Indian population, this enables new consumption patterns, enables them to, access a new category of loans that we call cash flow-based lending. Uh, Cash flow-based lending is vastly different from, the mainstream of Indian banking, which is collateral-based lending. So you take a home loan, etc. That's all collateral-based lending. Or you take a car loan, you hypothecate the car, and if you do not pay off the car loan, your car gets possessed. So that is the bulk of lending in India. But the problem is that, the person like Rajni that you saw in the center of the picture, she does not have collateral to offer. So how do you make loans available to her? So this is where, we categorize her as somebody who's got cash flows but does not have assets. And she is in India 2 or Bharat that we call, and we wanted to make sure that even though she does not have assets, we are able to give her a loan. And the largest argument was for India 3, which is, people who are really extremely poor. And this kind of a digital infrastructure has enabled direct benefit transfer to people on a massive scale. One of the main motivations was that in the past, there was massive leakage in the benefits that were transferred to the beneficiaries for, job generation programs, for, if there is a drought, there will be a job creation program, and usually the beneficiaries would get, only 15% of the money in their hands, because the rest would be eaten up by middlemen in the value chain. So how has this actually helped out especially during COVID? What happened is that the government decided that they will give about 200 million people direct benefit transfers. So around 500 rupees a month was transferred directly into the bank accounts of 200 million people during COVID. And this would not have been possible without having this kind of a digital infrastructure. And seeing this, many other countries around the world have, started building similar infrastructure for direct benefit transfer. Next slide, please. So if you look at this slide, 1.4 billion Indians have been given a digital identity.
Venkatesh, if I can intervene just for the
Yes.
audience, as the numbers are in crore, which is a unit of measure, Indian.
Yes.
A unit of measure that is equal to 10 million. Just for people that doesn't know, maybe everybody knows, but I thought it may be useful to know. Thank you.
Yeah, actually, that's why even I have a hard time converting the numbers, which is why I put that in the 1.4 billion in the headline itself. So, I'll tell you. So Aadhaar is something very interesting, because when Aadhaar was being designed, there was a lot of pulls and pressures from policymakers, politicians, saying that, you have to include caste certificates, you have to include blood groups, etc., in the Aadhaar itself. But one of the things that the team that designed Aadhaar said is, and this is again from a privacy perspective, that Aadhaar will only have a minimal amount of information. So Aadhaar has got your photograph, it has got your date of birth, it has got your biometrics, and it's a 12-digit number that is issued to you. And what can you do with it? So if you query the Aadhaar database, and I have to give my consent for somebody to query my Aadhaar number, and after that they get a yes or no answer. It just says that there may be 1,000 Venkatesh Hariharans in India, but it uniquely identifies me and ensures that this is the Venkatesh Hariharan that we are giving a loan to. So it's a very unique identity, and the Aadhaar system just gives a yes or no answer to the person who is querying the database to give me a loan or to open a mutual fund account for me, etc., etc. And what Aadhaar has done is basically dramatically reduce the cost of know your customer norms. So in the past, it was estimated that the KYC used to cost somewhere from 200 rupees to sometimes even 300, 400 rupees. And today it is 20 rupees, 30 rupees. So it has come down by orders of magnitude. What it has enabled is that, for example, there was at one point in time, India's largest mobile phone operator was issuing 1 million phones every day. And they were doing that by using Aadhaar. If they were doing that using paper-based system, it would have been almost impossible to do. So this is enabled, and because we are able to issue identity and do authentication at an extremely low cost, it has enabled people to offer low ticket financial products, whether that's mutual funds, whether that is loans, etc., etc. Next slide, please. Yeah, and this is again, this illustrates the scale of the transactions that are happening. So in financial year 24-25, and the financial year in India runs from April to March. So we did about 22.38 billion authentications. Next slide, please. If you go to UPI, for example, again, we did about 238 billion transactions. Next slide. This was roughly about $3.7 billion US dollars. Next slide, please. The final piece of the puzzle is basically the consent network. So the consent network is again very interesting because it's been built in such a way that if I give you consent to give me a loan, I can also revoke consent. So that way, if I decide that I'm not taking a loan from you, I can revoke the consent so that you don't have my data. It's private with me. And I don't think there is any other infrastructure that enables that. And in India, we believe that we've designed it based on GDPR, but we believe that what this technical infrastructure enables is the implementation of GDPR for the entire population at scale. So the number of transactions are going up 17% on a month-over-month basis, which is absolutely phenomenal. Next slide, please. So here we have a unique dichotomy in India. Now because of Aadhaar, UPI, the consent network, we have one of the most modern financial infrastructure in the world. The ability for us to kind of do direct benefit transfer to 200 million people within a very, very short span of time, to give that money directly into the bank accounts of people with minimal leakage, to give people loans at very low cost, at a massive scale, etc. It's like I don't think any country in the world has this kind of an infrastructure. And this exists at the same time that we have poor roads, intermittent power, poor urban planning. So we are in kind of a very digitally evolved state, but in a physically, let's say, not so evolved state. And the underlying infrastructure for this is the fact that in India, we have millions of people who have bank accounts. The Prime Minister, Narendra Modi, when he became the Prime Minister, one of the first things he did was to try and ensure that all Indians have a bank account. So about 400 million bank accounts were opened in a very, very short span of time, about 3 or 4 years. And that was called the Jan Dhan account. Now you combine that with the fact that, almost all Indians have a mobile phone, and mobile phone data is among the cheapest in India. So you have the Jan Dhan, you have the Aadhaar, you have the mobile phones. You can, build a whole series of digital infrastructure on top. Next slide, please. So the way we built it out is, focusing on what are the main societal problems. We started to do that completely clean slate thinking. So just to give one example, when we were designing UPI, we said to enable payments, what do you need? You need two things. One is what you have, which is your physical plastic card, and what which is your PIN number. So we said, why do we need the physical card? Everybody has got a mobile. So can the mobile be the what you have? And then you do the PIN number, enter the PIN number in the mobile itself. So this is a mobile first payment interface that we built, which is highly successful all across India. Then the second part of it is build public technology platforms that everybody can use. Not private technology platforms, but public rails that everybody can build on top of, and then get startups, get large companies like Google, etc., to build on top of the public rails that we have built. So an example of this is the fact that today there are some 200, 300 UPI apps that are there. And that includes players like Google, etc., who are, so for Google particularly, this is probably the first payment app that they have built anywhere in the world. And Google has been advocating countries around the world to build, public rails like UPI. They've even advocated to the US Fed to build something like this. Next slide, please. So the other thing is, the organization like iSpirit and others, Eight Step Foundation and others, we take a very, very long-term view. We take a 30-year view of the ecosystem, and then we work with VCs, policymakers, incumbents, challengers to build that ecosystem, and that requires huge amount of effort. Next slide, please. Yeah, and I think what has been unique about all this is that many of us who have participated in building this, we have been building this in a volunteer-driven organization without aiming for public visibility or using public money. I think there's a whole bunch of technologists who came together to build both Aadhaar, UPI, the consent network, etc., and give it back to society as a public good. So, and then, the government entities or quasi-government entities operate that. So, so I think in conclusion, I'll say that what has been built out in India is extraordinary. Because these are entities that are owned and controlled by Indian organizations, it enables us to, preserve our digital sovereignty, enable financial inclusion at scale, and increase the country's GDP and economic growth. So with that, let me stop.
Thank you. Venkatesh, perfectly on time, full of information, very useful, very interesting. Please post your questions on the chat box, Q&A. Now the floor to Magda Bianco, as I said, is head of the Directorate General for Consumer Protection and Financial Education at the Bank of Italy. This directorate deals with conduct supervision, individual consumer protection, and financial education. Magda is also member of the Governing Council of FinConnect, the International Financial Consumer Protection Organization. And since 2021, she is co-chair of the G20 Global Partnership for Financial Inclusion. And since 2022, she is chair of the OECD International Network for Financial Education, Magda has published articles on many issues, has been economic advisor to the Italian Ministry of Justice, and also consultant to the President of the Republic of Italy. Magda, then the floor is yours. From your unique perspective, what is what you take from this experience, how it is seen internationally, what questions and suggestions you have?
Thank you very much, Sergio, and thank you very much to Venkatesh for this presentation. As he discussed, as he presented, actually the Indian journey into building a modern financial infrastructure has been really amazing, as he was discussing. It was fast and overall very successful. Building on digital ID, as he was showing, Aadhaar, digital payment, UPI, and data exchange. Basically, India has made financial products and services available to a large share of population which could not access them before. Venkatesh has presented data numbers on access and on the different types of services which are now available. So as a whole, the Indian stack, these three steps, have contributed to a really large increase in financial inclusion, access to people to financial services in different ways. First of all, in terms of access, he gave us the numbers. I would give you percentages using the Findex data. These are the summary indicators produced by the World Bank since 2011 on the degree of financial inclusion across 140 economies. Actually, India in 2011 had 35% of the population having an account with a formal institution. That's the usual proxy that we use for basic financial inclusion. Well, in 2024, this number grew to 89%. Not just that, one other very relevant point is that we do not observe gender gaps, which in fact are still there in many other emerging countries. So this is the first important evidence, the increase over time, which she already mentioned. But we also have evidence on the benefits that this produced. He made examples, basically. We have also academic evidence. Professor Dubey and, I hope I pronounced it correctly, Purnanandam, show actually how the diffusion of digital payments, a cashless society, as they call it, has actually increased, on the one hand, household income, that is people, and on the other hand, small business activities. And the channel that they identify are basically a reduction in transaction costs for households using payments. And on the other hand, the availability of information on micro enterprises that reduce the credit constraints to small business activities. I have to say that actually the importance of a solid digital infrastructure for payments, first of all, is now evident in many other countries. Some of them emerging countries, for example, Brazil with PIX has been another major example. And hence, we actually started with the Global Partnership for Financial Inclusion, which is a working group of the G20. We started working on the role of digital public infrastructure exactly under the Indian presidency in 2023. And hence we produced a report which you may find on the GPFI website. It's called the G20 Policy Recommendations for Advancing Financial Inclusion and Productivity Gains through Digital Public Infrastructures, where it acknowledges the importance of digital public infrastructures and also gives some policy advices in order to make them be developed in a proper way. But I have to say that in further work with GPFI, with the partnership in the following years, so under Brazilian presidency in 2024 and South African presidency in 2025, we advanced the analysis on how to enhance digital financial inclusion. So the question was basically, are DPI enough? And the starting point here was the observation that in some cases, in some countries, The actual deployment of digital infrastructure produced, of course, a lot of benefits, and we heard them today, but also some issues, some problems, some challenges, and challenges that we actually observe in many countries. The one that we observe everywhere is the huge increase of frauds and scams in payments. That's a problem not just in emerging countries, it's a problem also in developed ones. Another issue which is evident in some emerging countries, but growing also in other countries in advanced ones, is the increase of over-indebtedness of people. And this is due to the much easier access to especially digital forms of credit. Think of buy now, pay later, how easy it is to access this. And this has become a huge problem. For example, it has been recognized as a huge problem in Brazil, but also in Kenya and other countries. Further issues, in some cases, we have new forms of exclusion. For those digitally not equipped, or those living in rural areas without digital connections, for the elderly typically, for the less educated. Again, also in in developed countries where, for example, the closing of branches of banks is somehow creating this issue. And of course, more recently, the risks of discrimination, for example, associated with the use of artificial intelligence in the evaluation of creditworthiness of companies, especially micro companies. Well, the main reflection, the main results of this analysis were basically the development of a framework which recognizes that access to digital financial instruments is one step. But we need first also usage. We need to see that the people actually, after having access to an account, uses it. And for example, under the South African presidency this year, the past year, we saw how there in South Africa, there is a big issue of usage. That is, people receive their income on a digital account, and then they take the income out the first day, and then they use cash to pay. So it's access, but how much does this translate into usage is to be seen. And here we have some data from Findex. And for example, also for India, we have data on those who actually made a digital payment. In 2024, it was 29% of the population compared to 89% having an account. And those who receive digital payments are in Findex 35%. So there is still a gap between these two numbers. So we need to move from access to usage, but that's not enough. We really need quality. That is, we need to make sure that these financial products and services which are being offered are really products and services which are useful to final users. They shouldn't be just innovative products that produce, of course, they should profits for firms, but they should also produce what we call financial well-being. They should produce a result that is really useful to individuals and in a way that is spread across different groups and reaches especially the vulnerables. So our final step of our journey was to try and define what is financial well-being, because that should be the outcome on which we measure whether we have produced a consistent access to the financial services. We found a way to define it under the Brazilian presidency as a state in which individuals are able to smoothly manage their financial needs and obligations. They manage to use digital money for their everyday needs. They can cope with negative shocks, so financial products ensure resiliency. They can pursue aspiration goals and capture opportunities. They are a source of also long-term financial well-being and also make them satisfied and confident about their financial lives. So objective and subjective components of financial well-being. So working on this, we recognize more and more that beyond solid and safe digital infrastructures, where also data are actually adequately protected, and we heard about it, we also need other elements in terms of policy. The first is certainly to govern innovation since the beginning, to make sure that the innovation that is introduced over time is introduced in a way to have in mind the benefits of the whole population and not just part of it. It doesn't generate concentrated welfare, but really wide benefits. An example, without judging the technical component, for example, the European AI regulation goes in this direction. You try to govern innovation in a way that, at least in principle, benefit everybody. So first, this is the first component. Second component, you need to have an adequate financial consumer protection framework. A framework for consumer protection which sort of makes sure that the products and services that are offered, that are developed by financial intermediaries, are developed having in mind the interest of, I'm almost finished, the interest of consumers. And this is based on adequate regulations, enforcement mechanisms, supervision, and so on. And part of these consumer protection mechanisms should include also effective redress mechanisms for consumers. They are typically ADR, alternative dispute resolution mechanisms, easy to access, not costly, so that consumers may know what to do if something goes wrong. Third element and last one is adequate digital financial inclusion programs to empower consumers, to make it sure that they know what they are buying, what they are accessing in a responsible way, because they should recognize also that some of financial instruments do not have a protection. Think of crypto, of some kinds of stable coins, but also to understand which protection tools are actually available to them, so how they can enter safely and with trust in the financial sector. It is certainly essential to deploy the whole set together, and basically this set of tools should accompany any further innovation, the use of AI, open finance, open banking, and so on. Thanks a lot.
Thank you, Magda. You touched so many things, give so many suggestions that we will need maybe another webinar to go through. But we have a question. So from Claudio Cecchi, who asked on the digital sovereignty. So he's asking if the transactions in India are controlled only by the Indian financial system, or there is still, what is the presence of foreign? And in giving now the floor to Venkatesh again, of course, I encourage him also to address, if he likes, some of the issues that Magda has raised, the challenges, but also what are the next steps in terms of or measurement in terms of usage, quality, consumer protection, and resolution mechanism, this kind of things. She mentioned as challenges trade and scams, over-indebtedness, new exclusions, and discrimination. Venkatesh, the floor is yours.
Thank you. And, the digital sovereignty issue is something very close to my heart, because I wrote a paper on that for the cyber breaks. And I think that can also be shared. It's a public document now. But I think the Indian government has taken a very proactive stance here. One small example is that along with the bank accounts that were opened, the 400 million bank accounts that were opened, they were also issued a RuPay card. And this RuPay card is controlled by the National Payment Corporation of India. And this is separate from the MasterCard and Visa. So these RuPay cards have become extremely big in India. The other thing is that if you look at UPI, what happens is, one of the reasons that it's extremely popular is that if you are a taxi driver and I'm making a payment to you, the payment goes into your bank account instantaneously. Earlier what used to happen is that small merchants, etc., refused to use the MasterCard and Visa because of the merchant discount rate, which used to be sometimes as high as 2.5%. So if you're a grocer and your margin is 3%, you did not want to give 2.5% to MasterCard and Visa. So you would not have, you would use a Visa or MasterCard only if the transaction size was about 200 rupees or about 500 rupees. So I've seen, grocers saying that it's only about 200 rupees that we'll take these cards. But all of them except UPI because the money goes immediately. The government subsidized the payment, the transaction cost. So they defrayed the cost of the banks and the National Payment Corporation to ensure that everybody uses. So currently there are no major transaction fees on using UPI for the merchant as well as for individuals like me. So everybody is using it left, right, and center. In fact, it's now we have the opposite problem. Today, if I want cash and if I want change, it has become so hard because even for small transactions as low as 10 rupees, which is one tenth of a dollar, even for such a small transaction, people are using UPI. So what has happened today is that Visa, MasterCard transactions are used by the elite. The reasonably well-off people have Visa and MasterCard credit cards, but everybody below the elite class uses UPI. And even, of course, the elite also use UPI. The key thing is that tomorrow, if there is a denial of technology or if there is sanctions on India, it does not affect India. So there were sanctions on Russia in 2014, and people who were at metros and waiting to get in found that they could not use their MasterCard and Visa to get into the metro. That kind of a denial of technology cannot be applied in India because we have UPI, which is now the dominant payment infrastructure in India. I'll quickly go over the points that Magda also mentioned. Before that, I'll also say that many organizations, many multilateral agencies around the world have been very keenly observing what has been happening in India, and they've also been asking how can other countries in the world deploy this. So Aadhaar is like a monolithic infrastructure. It can be used only, it was built at a very different age. So the Gates Foundation, Omidyar, Rockefeller, many of them came to the Indian government and said, can we have the Aadhaar source code? We want to deploy it in other countries. So there were many challenges in opening up that code. So the team that built Aadhaar built something called the Modular Open Source Identity Project, which is basically open source software, which is now being deployed in Ethiopia, Togo, Philippines, Madagascar, and some 7-8 other countries, Sri Lanka. So about 100 million identity cards have been issued using MOSIP. The UPI, the National Payment Corporation of India, has been collaborating with countries around the world to deploy UPI. Brazil, what I'm told is that Brazil looked at UPI and built their own implementation of UPI, which is called PIX. So we are working with other countries to deploy the digital stack that we have built out. Coming to the points that Magda flagged, on the quality of usage of the bank accounts that have been created in India. To me, it's quite remarkable because the government seems to be following what was prescribed in this book called Portfolios of the Poor, which is, I think, one of the most excellent research books that I have ever read in my life. Because what the authors did is they tracked poor people in India, Bangladesh, Kenya, and a few other countries over a span of 6 or 7 years, I think. And they try to understand what are the key challenges that they have. And their recommendation was that if there are bank accounts, those bank accounts should also be used to, give insurance, etc., etc., etc. So what the government in India has done is that these bank accounts are used to give direct benefit transfer, pensions, and rights entitlements. And then you have a RuPay card that goes with these cards. And they are encouraged to use these RuPay cards by saying that if you consistently use these RuPay cards, you also get, the added benefit of insurance. So there is, this whole ecosystem that is being built around, and we're trying to make it as useful as possible. And I see the results because today, when I go to buy vegetables, every corner shop, has got UPI. You go to the remotest part of India, there is UPI. And the big benefit for people is that the money comes immediately. So they are not worried that, hey, there is, will I get this money? Will it take? Will there be a delay, etc., etc. So every taxi driver, this is just in 5 years. Every taxi driver in India uses UPI, and in last 5 years, that transformation has been remarkable. So that addresses the quality issue. The over-indebtedness requires, infrastructure like the public credit registry. The whole idea is that, that should be a central repository where all financial transactions, especially loans, etc., get recorded. And if you're building digital infrastructure for giving loans, the public credit registry has to be, also very easy to access. So if I'm taking a loan from you, I give you access to, my consent to read my public credit registry and my, it gives you access to go to my digital locker to look at my bank statement, etc., and then give me a loan. So I think that's one method of reducing over-indebtedness. In new forms of exclusion, my parents were in their 80s before they passed away a couple of years ago. And they had a huge challenge in terms of using UPI, etc., etc. So I think one of the goals that we should have is not a cashless society, but a less cash society. Because from an ecosystem perspective, we need, to be able to track transactions, to be able to, increase tax collection, etc., etc. India has had historically a low tax to GDP ratio because most of the transactions were not reported. Most of the transactions were in cash. I've seen, wealthy food vendors, for example, who make millions and millions of dollars every year, not reporting and, paying very little tax. So getting more people into the tax net is possible if they are in the digital ecosystem. But at the same time, we should not aim for a less cash, zero cash ecosystem. The risk of discrimination in AI is something that it's an evolving issue, but I think one of the key things here is explainability of the models and how they arrive at the decisions that they are taking. So I have talked to lending institutions, and they have had to investigate why a certain person was denied a loan, and sometimes they found that it's not because this person does not have the ability to repay the loan, but because he's from a certain community, and human biases have been encoded into these algorithms. So having that explainability framework is important to kind of deconstruct the decision-making process that the AI algorithm undertook. The issue of consumer protection and reduction of fraud is a very, very burning issue. Just to give you an example, my own wife, who's like very, very smart and digitally literate, was told that she is under a digital arrest, and she was under digital arrest for 4 hours. And then, I had to kind of, and then she called me in panic, and I said, there's nothing called a digital arrest. And this is not just one example. There many people who have been told that, I'm a police officer, I'm putting you under digital arrest because your bank account has been identified as a conduit for black money, etc., etc. And people have lost, huge amount of money because of that. So one of the good things that the government has done is, started identifying spam calls. And now when I get a call, on my phone, it just gives me a flag saying that this could be a spam, and I've stopped accepting those calls. So it has brought down the number of spam calls dramatically. Earlier, 90% of the calls I used to receive were spam. Today I don't accept most of these calls, and it's just been phenomenal. It's been a game changer. And in this, the Telecom Regulatory Authority of India and all the different telcos have been collaborating. I also see that bank officers have become very responsive. So if there is so my neighbor recently lost about 1 lakh of rupees to some phishing attempt, and he got a call saying that your electricity bill is due and overdue, and if you don't pay, we will cut it. And so he gave some OTP, and within about 30 minutes, 1 lakh rupees was deducted from his bank account. And that's a lot of money for a retiree. So he went to the bank, and the bank immediately took action and spoke to the counterparty bank and froze those accounts. And the process of getting that money back is on. So I think the ecosystem also has to respond. And sometimes I do wonder, should we move so quickly? Unfortunately, sometimes I feel that the digital public infrastructure ecosystem has adopted the private sector principle of move fast and break things. I think given that we have a larger public responsibility, not just a responsibility to shareholders, but to people at the bottom of the pyramid, etc., we have to move thoughtfully and fix things. So maybe we should stop prioritizing, ensure that there are more governance frameworks before we roll out the digital public infrastructure. I would say that my experience has been that redressal mechanisms are fairly robust. There is especially when it comes to UPI, etc., there is a fair degree of responsiveness. But there is the ideal case scenario is where we have zero frauds, and if money has been stolen from my account, I get it back within the next day. But I think we still have a bit long way to go to that particular point. So Magda, I hope I have responded to all the points.
Thank you, Venkatesh. Thank you very much. We have a comment in the chat box from Subhash Agrawal, a member of our steering committee, that note that the act of purchase and financial transaction via UPI has very low cognitive load, and this is maybe facilitating the access of everybody in the population. And also he notes that UPI has slowly become a component of India technological soft power in the world, and as you mentioned, has been adopted in several other countries. Before going back to Magda, I would like to ask Daniele Frigeri, the Director and President of CeSPI, if he has any comment or suggestion as some question. I thought it was interested in some questions, and overall, the issue of financial inclusion may be of interest to him as well. Daniele?
Yeah, thank you, Sergio. Thank you, Venkatesh. Just some very, very quick question for curiosity, because it's part of our job in Italy. First of all, if the financial institution was involved in this bidding process, in which way? Second question is how is the cost for the consumer to enter in the system? And finally, in Italy, the issue of financial education is very linked to the digital divide, and it's a sort of obstacle, no, for the development of this kind of products. Do you have the same in India, and how did you tackle these obstacles? Thank you.
Thank you.
Yes.
Yes, Venkatesh, go on, and then Magda. Yes.
So quickly, all financial institutions were involved in building this out. All the 4 regulators of the main financial entities were involved. The central bank was involved. The insurance regulator was involved. The securities regulator was involved. So all of them were involved in the financial architecture. And initially, there was a lot of opposition for UPI from the large banks in India, because they felt that the money that they are making from MasterCard, Visa, the credit card revenues will disappear. So there was a huge amount of opposition, but we went and spoke to the chairman of those banks, and we kind of got them on our side. And frankly, without their support, the UPI would have been dead in the water. So I would say yes, there was good support from the very far forward-thinking bank chairman. The cost to the consumer, I think the government has taken a conscious call that we will keep the cost very low to the consumer because we want to push digital adoption. So the cost for UPI is to some extent defrayed by the government of India. The cost that the transaction cost that the banks bear for every UPI transaction, to some extent, that is defrayed, so that it's not passed on to the consumer. Maybe at a later date, there may be slight fees for the consumers also, but at this point in time, it is friction-free for consumers, which is why there has been phenomenal adoption. In terms of financial literacy and digital divide, the main thing is that you need smartphone penetration to propagate digital infrastructure like what we have. In India now, what we are seeing is that it's only the poorest of the poor, the extremely poor, who do not have a smartphone. They'll have a small feature phone, and you can't. We're trying to enable UPI on that also, but my guess is that as incomes rise and as the cost of the smartphones come down, the smartphones will become ubiquitous, and that becomes the medium for financial literacy. The fact that every Indian has got a bank account, that the public sector banks, etc., have been very aggressive in opening bank accounts for everybody. So you have bank accounts, you have mobile phones, you have extremely cheap internet bandwidth. So you put all these three things together. On top of that, you can build a digital financial infrastructure. So the recommendation for other countries would be ensure that everybody has a bank account, ensure that smartphone access is there, subsidize it if required, so that everybody has got a smartphone, and thirdly, ensure that internet bandwidth is very affordable so that people don't have to think 10 times before logging onto the internet.
Thank you, Venkatesh. Magda, do you have any reaction to what has been said so far?
Well, not much, meaning that it's very interesting, and thank Venkatesh for all his answers. I do share all what he said about what is needed, about the main advantages that have been produced by this tech, by digital identity, payments, and then also now data exchange, with all the attention that has been put in a sense, incentivizing the use of these new financial instruments, and hence make it become a habit of the population. So one hopes that it remains also when possibly, as you were saying, maybe costs start increasing a little bit again, and so on. And maybe one word about financial literacy. Of course, Daniele was asking, I guess, about India as well, but I do think that's very relevant, because in order to facilitate this transition from certain habits to new habits, to protect those that are less digitally equipped, and also to make sure that also the most vulnerable, those with lower income, low education, women often are actually included. Financial education plays a very important role. At least the data tell us this, that when you have higher financial education, you manage to get a more high quality financial inclusion. Here, of course, there are many challenges, because, one thing is having that in schools. That's a solution in the long term, of course. But in the meantime, in the transition, you need to make sure that also adults are addressed, and that's a big challenge. I don't know whether you have experience in India, but in Italy, it's very difficult, because, of course, adults have their own sort of education. They have their own prejudices, stereotypes, and so on. So addressing those is very complex. And we do need, well, a careful design of financial literacy programs that address these prejudices, stereotypes, and so on with a specific language, addressing issues that are really useful for the final users, for adults. So, and they have to be designed depending on the segment of the population we are really addressing. So for migrants, you have to use some language and address specifically their needs, for the remittances and other issues that matter a lot for them. If you're addressing elderly, you probably have to deal with digital financial literacy, making sure that they become able and less scared by digital financial tools and so on. So this is a major challenge, but it's something that I guess in every country we are now trying to address. Thank you.
Thank you, Magda. So if we don't have any last minute questions, I would like to give the last few words to Venkatesh, and then we close the webinar. Please, Venkatesh.
So on the financial literacy bit, I'll say that, our main goal was that, make Aadhaar, UPI, the consent network extremely easy to use. So in terms of usage, we have not had to really, sit and teach people much. If you want to make a payment to somebody, just you scan a QR code, you enter in your PIN number, and there's a nice beep that goes, and the merchant also has a sound box, and it says that he may be busy, but he gets a notification saying, you have received 200 rupees in your Paytm account, etc. So it's been made very easy, but the real challenge is that once you have started using all this, then you move to a level of sophistication. You start saying, how do I invest my money? How do I buy mutual funds? What are the right mutual funds to buy? Etc., etc. And then, the amount of scams, etc., digitally have, proliferated like anything. I think any country that is deploying a digital infrastructure should learn from the lessons of India and, start thinking of how can you build those checks and balances to ensure that these things cannot be, misused. And it's a very hard problem. I mean, it's a thief. The thief and the police are constantly at odds with each other. But I think there are many advantages of using digital technology. Scams are the biggest downside. I think redressal has to be very, very fast because we have to make people confident about using digital technologies. If the scams are so bad that people start getting very scared of using digital technology, everybody will say, let me be careful, let me rather deal in cash. And that's not an ideal situation. And I'll conclude by saying that what we have done in India, we are very proud of, but we also want the rest of the world to benefit from that, which is why we have made the modular open source identity project. You don't even need to take our permission to use MOSIP. You can just download it from GitHub and try it out and start using it. And for payments, there is open source projects like Mojaloop, which is supported by the Gates Foundation and others. So that's kind of like UPI. The consent network infrastructure, I think, is partly open source. So I think most of these things, any country that wants to deploy it can quickly deploy it. And I think we estimate that the GDP benefits of this infrastructure for India in the next several years would be at least 0.5% of GDP annually over the next few years. I think the amount of friction that we eliminate in making these payments, etc., is going to be, it keeps compounding for the economy over the next several years. So thank you so much.
Thank you, Venkatesh. Thank you, Magda. Far from me to look like a notorious president for whom everything goes very well, but I think that this webinar has been very interesting, very good. Thank you. Thank you for all of you who participated, and also especially to the ones that posted their questions. Please stay tuned. We will continue our series of webinars, and have a wonderful rest of the day. Bye.
Thank you. Bye-bye.
Bye. Thank you.